Sponsored by the Securities and Exchange Commission of Nigeria.
I have always said that there is this question about the role of government, and regulators in a developing economy, and the whole interface between private capital and their rights and their responsibility to society. Investment has to be a partnership. So question for me is, why can't we have a law that compels companies like MTN and Glo and Shell to list? Why? Why? There's absolutely no reason. They don't need to own 100% of their companies, and they don't have to be held closely by a very narrow range of Nigerians. We have a capital market. Any company that generates revenues beyond a certain amount in this market should be compelled to list.
That was Central Bank Governor Sanusi Lamido Sanusi, making an aggressive case for the compulsory listing of large telcos and oil and gas companies on the Nigerian Bourse. The calls come at a time that the stock exchange appears to be struggling to come out of what feels like a 4-year bear run. Today we take a look at new listings and how they fit into a broader plan to improve liquidity and interest in the Nigerian stock exchange. The comments of the central bank governor are one of several calls in Nigeria for large telecom players such as Vodafone, Airtel and MTN, as well as multinational companies in the oil and gas sector, to list their shares on the stock exchange.
The major calls for these listings has come from the National Assembly, the Capital Markets Committee, and the CBN Governor, Malam Sanusi Lamido. And the major argument from them is that the pie is large enough and all of it shouldn't be repatriated at the end of every accounting year, so Nigerians must share of this wealth-making process. Those who are calling for these compulsory listings are people who've actually seen the figures. They've seen the pie, and they wonder why Nigerians are not getting a share of the pie. They look at the figures being repatriated in profits by the oil companies, by the IOCs, international oil companies, by some of the big telcos, and they want Nigerians to get more of this and come into this wealth-making process. Now, you also recollect that some Nigerians bought MTN shares during their private placements, and they're actually looking for a more vibrant exchange where they can trade beyond the current OTC platform.
While calls for mandatory listing are not likely to end soon, capital market authorities in Nigeria are taking a more consultative approach by providing an attractive environment for companies to take advantage of the benefits of listing.
We would like to see deep and liquid markets. In the equity product category, in order for you to have deep and liquid markets, you have to have a lot of good companies, that both big and small.
I mean, new listings are the essence of a stock market, primarily because a stock market enables an economy by enabling it to raise medium to long-term funds. And so for businesses to be able to raise medium to long-term funds, they would need to list or borrow from the bond market. And so that is particularly significant, because it's in that regard, it's an enabler of an economy.
We did a market segmentation study last year. Remember, we collapsed 33 industry sectors into 12 to be more reflective of the economy and also the conform with global standards. What we realized is that 4 major sectors are underrepresented in the Nigerian capital markets. ICT, which telecom falls under, oil and gas. Nigeria is known as an oil and gas company, but less than about 3% of the market cap is oil and gas, and all of it is downstream oil and gas. Utilities, and then agriculture, which accounts for more than 40% of GDP. So we felt we needed to make an aggressive listing push in these areas to attract companies. We're not just going and asking companies to come and list. We've developed, from interacting with companies and other stakeholders, we've developed a list of value-added services that we're going to be providing to companies, such as independent equity research, investor relations programs, advocacy, corporate access, and the like. With regards to the noise about legislation for telecom companies, what we've realized is that with over 90 million subscribers and growing, none of the majors are listed on the exchange. So we've engaged with them. We've asked, what are the things we need to do to make it attractive for you to list? Some of them have actually spoken with us. And I'm happy to report that 3 days ago, the Securities and Exchange Commission approved our listing rules, our new listing rules, that make us more of a competitive listing destination as compared to London, Johannesburg, New York, and some of the other major listing destinations.
And those listing requirements, in my opinion, for the first time, recognize the importance of supporting businesses and nurturing businesses, but more specifically, supporting and understanding the peculiarities of different sectors of the economy, but at the same time ensuring that we continue to build a world-class market by ensuring that we have global standards. So the new listing requirements today better support the oil and gas sector because they have peculiarities in their business model. But they also, even more significantly, support small and medium-scale enterprises. I'm very excited about this.
It is attractive, I believe, to come to the Nigerian Stock Exchange now. For companies that are not willing to come, especially companies that have systemic importance in the Nigerian economy, I think the government needs to have a package of fiscal incentives that if they come to list, they benefit from those incentives. And if they don't, then they don't benefit. That is the approach that we would like to see evolve.
One company that listed its shares recently is Austinlars, a local manufacturer.
Well, in the life cycle of a company, as you begin to get technology right, get all kinds of things right, and marketing right, you get to that point where you reach that takeoff push. Now, Austinlars, for years, has been building strength within a certain regional market. You go around the South area, it's a very well recognized brand in some of these very important sectors. And it thought it was ready. The company thinks it is ready to make the big leap. And so listing gives you the number of things. Not only does it provide a cash injection that will drive that takeoff and create more wealth for all the stakeholders, but very importantly, being a listed company, sometimes we don't realize it, has a promotional value. It has a marketing effect. And as it goes from being a regional player to becoming a national and hopefully global player, it needs that promotional effect of being listed. And that's part of why Austinlars has come to the market. There's a bond issue in the pipeline, and once that kind of capital is in place, partnerships with some Japanese technology players that will enable Austinlars leverage some of its strengths into a global marketplace, really, and that's part of what the debt will help drive.
Another company seeking to use a stock exchange listing as a springboard for future growth is Niger Delta Exploration and Production PLC. When it happens, the company's listing will make it the first real upstream oil and gas company on the NSE.
Between 2005 and now, that's 6 years of oil production history. And you can see that our numerical staff strength of shareholders had grown from about 50 people to 300, and today there are about 650 odd shareholders, all Nigerians. But when you think in terms of the assets that's available to us and the kind of financial requirements, to pull through those transactions, we would need to externalize our fundraising activities such that the quantum of money that is available is adequate for the kind of opportunities that we have. Right. When you think in terms of our last transaction, which was a couple of hundreds of millions of dollars, all that money is not going to come from our existing shareholders, and this is one of the reasons why we need to stock up, because those opportunities are rapidly manifesting, and the earlier you can take advantage of them, the better for a company like ours. You are looking at transactions in the multiples of $200, $300, $400 million, at a go, and those are not the kind of money our existing shareholders are going to be able to put forward and be able to, take take responsibility for. Well, you must recognize that today Nigerian stock is very cosmopolitan, particularly if you look at the banks. A lot of Nigerian, big spread of Nigerian shareholders. But when you think in terms of the oil assets, and this is #1 industry in Nigeria, there is absolutely no flotation that you can actually point your fingers on that Nigerians have significantly in large numbers participated in. So for me, this is not an acceptable situation or circumstance to find ourselves. And everybody's talking about Africa, opening up Africa to investment, opening up Africa to big capital markets. This is one of the reasons I believe that, you know, a company like ours is in a very, very good position to take advantage of those opportunities.
And at this time, given the elements of the economic agenda of the federal government, you would expect that we will see a number of companies come to the market, given also that the stock exchange now has a full-fledged department that is very focused on working with companies to come to the market, and also on ensuring that those companies understand their obligations when they come to the stock exchange to list.
We have really embarked on an aggressive sales drive. We have over 550 companies that we're actively talking to about coming to list. And some of them have given strong indications that they will be listing this year. So I believe that Austinlars is the first one, and we should have a busy calendar, especially as the market begins to stabilize and to grow again. From the indications we have from companies, I have to preface it by saying, as long as market conditions continue to improve gradually, that we should get nothing less than 20 this year.
Nigeria's stock market today is heavily weighted in favor of large cement companies and banks. While further listings on the NSE this year will depend largely on a sustained improvement of market conditions, the strong push by the new management of the Nigerian Stock Exchange for new listings should see a lot more listings this year, thereby providing more depth and liquidity in sub-Saharan Africa's second largest stock exchange.